Snipers, you have to see what's happening to the Bitcoin price this Thursday. As I'm at the Ritz-Carlton about to get breakfast, but I had to get this emergency video update about the Bitcoin price out to you guys, as a lot of people are starting to say that we're rejecting 45,000 US dollars. We're even getting people roasting us in the comments yesterday from our video saying that we have clearly not rejected 45,000 US dollars. And I want to be very clear, snipers, on the institutional timeframes, we have yet to see a rejection of 44,800, which is the major resistance that we've been watching here on the Snipers channel. So make some noise for the YouTube algorithm and smash the like button, snipers. If you've been tuned in to the most accurate cryptocurrency channel on the internet here at youtube.com/snipers, we have a lot to talk about today, but the point of today's video is to understand the fact that on the 6-hour time frame, which is the institutional time frame, it's a less common time frame than the 4-hour chart. The 240-minute chart is used by retail traders, so the institutions do not print their volume there. We have descending sell pressure, and notice how the sell pressure we're seeing right now is way less than the amount of buy pressure that we've seen since the start of the Ukraine conflict, with Bitcoin up over 25% since those tensions. Not a surprise for those that have been tuned into the Snipers channel. I told you guys, Bitcoin in geopolitical tension is the best asset to be in. And we looked at the monthly candles. We predicted that Bitcoin was going to outperform the S&P 500. And that's exactly what's happening right now. The top performing asset since those conflicts, and of course commodities are doing well. We'll talk about that in a second because this is a 4-dimensional channel, the #1 cryptocurrency technical analysis on the internet. Once again, smash the like button for the YouTube algorithm, snipers. I want to talk about inflows. We do have $73 million of Bitcoin coming onto exchanges. We have Ethereum and Tether leaving exchanges. I'm not too worried about this. A little bit of Bitcoin coming onto exchanges is fine. 44,800 is an important resistance. We're gonna see garden variety market behavior and a pushback there by the bears. And of course, because we've yet to come below 41,950, that's also a very bullish confirmation, because we know here on the Cypress channel, the range that we're in is 41,950 as a support and 44,800 is a major resistance. Why is 44,800 so important? I'm not gonna bang the tree another time here on the charts. I'm just gonna quickly summarize here. We invalidate the head and shoulder pattern by getting above the neckline. This is a head and shoulder pattern that has been forming here for several months. It's a macro pattern. Getting above 44,800 with hourly and 4-hour decisive candles will invalidate that. And then secondly, it will validate the Adam and Eve bottom with a target of around 60,000 US dollars, which would put Bitcoin back above the 20-week moving average, the 200-day moving average, and that right there could allow Bitcoin to see continued price discovery, new all-time highs by the end of 2022. So 44,800, the most important resistance level right now for Bitcoin. This is a huge moment. We need to get above that level. As long as we stay above 41,950, things are still looking good. And as I mentioned, institutional time frame looks extremely well so far. It looks like we want to range here between 41,950 and 44,800, and that's totally garden variety market behavior, because those are the most important levels for Bitcoin right now. And don't be surprised if we see a sell-off in altcoins when Bitcoin is seeing these downside moves, because we've been talking about this, once again, the #1 cryptocurrency channel on the internet, that the Ethereum to Bitcoin chart, the leading indicator, the canary in the coal mine, just like the Russell 2000 with the small caps leading the large caps in traditional markets, Ethereum to Bitcoin chart has been showing weakness. That is very clear. And this is a market sentiment indicator. The fact that people are not willing to get into altcoins right now as strong as they're willing to get into Bitcoin, which is causing Bitcoin dominance also to form new yearly highs right now, is an indicator of fear in the market. But guess what? Unlike 2020, people have realized, okay, but actually Bitcoin is the greatest hedge during these type of geopolitical tensions. And so seeing Bitcoin dominance move up right now, it is facing some resistance. What I'm watching right now, for those that have been on our Discord group, we have the #1 cryptocurrency technical analysis and the #1 cryptocurrency Discord group in the world. Shout out to all of those on the Discord. We've been sending out signals for altcoins as swing trades. I just recently sent one out for Polygon, because here's the thing, we're hitting a resistance with Bitcoin dominance. This could be an opportunity to be entering into altcoins, as a lot of people are getting fearful and selling off these altcoins. Bitcoin is proving that 34,788 potentially could be that bottom. For the immediate short term, that could allow altcoins to rally, especially if Bitcoin tests 41,950. It allows altcoins to absorb the downside, and then an upside move with Bitcoin dominance hitting a resistance could catapult altcoins to the upside. So I'm monitoring altcoins right now with Bitcoin dominance testing this midpoint of this channel here, around 44% dominance. There is a potential we could see a garden variety short-term rejection of this area before we see continued upside, depending on maybe we need to wait until the Ukraine conflict is over or whatever that might be. But you can see here the Ethereum to Bitcoin chart leading the altcoin chart that factors in the coins outside of Ethereum down below this major support. Not a surprise once again for those that have been tuned in to the most accurate cryptocurrency channel on the internet. Let's hit 100,000 subscribers on this YouTube channel. Get that platinum plaque, guys. And statistically proven right now by social media that we will hit it in less than a year, but I think we can do it in the next 30 to 90 days, snipers. And then I do want to talk about this. Look at October 2021. This validates our thesis. Very similar price action to what we saw in October 2021. The main point of this chart is to realize that 41,950 is the major support right now inside of this consolidation. If we want to copy this move and see an exuberant rally back to the upside, Bitcoin needs to hold above 41,950. Seeing weakness at 41,950 may start to take some of these bullish scenarios off the table for the immediate short to medium term, snipers. And so just realize this. Let's get back on the charts because it's very important, and we'll just address the four-dimensional revolving parts of the market like the DXY, which has predicted the 2017 and the 2020 bull market and is currently facing the same resistance it faced those two past times. And we're going to talk about why that's super important to watch right now. But lastly, I want to cover what's happening to Bitcoin right now. Realize that we have yet to see institutional sell pressure at 44,800. What we are seeing is a garden variety rejection to allow the shorts to at least have a meal. But at the end of the day, until we see a 6-hour sell candle that equates to the amount of buy pressure that we've seen since the start of the tensions in the Ukraine, we cannot sit here and say that we've seen any sort of rejection. We are seeing garden variety market behavior for an asset testing an extremely important resistance where if it breaks above this resistance, our first upside target is 49,700, and then we could expect another garden variety pit stop for Bitcoin around the $49,700 level to maybe keep 44,800 as support before we see continuation towards 60,000, where I think that's when we might see a little bit more of a longer term slowdown. But just realize right now, since we are above 41,950, testing 44,800 without institutional rejection, as long as we're inside of this range, things are looking good. If we break below 41,950, 38,000 comes on the table. We start to invalidate some of the past patterns that Bitcoin has followed, and that will start to bring bearish targets on the table that we'll have to monitor. We really don't want to get down to this $38,000 level or even breach below 41,950 at this point. If we look at the 50-day moving average, that would be the only net to really hold us if we see a rejection and a break of 41,950. If we see institutional sell pressure, then what we want to monitor at this point is going to be the 50-day moving average, sitting right at the midpoint of our range here of 38,000 to 41,950, right at around that $40,000 level. That would be the make it or break it. But really, the make it or break it is always our red lines here on the Snipers channel, because those are major volume support and resistance levels for Bitcoin. So 41,950 needs to hold. If we see, once again, hourly and 4-hour decisive candles below that level, that's the first warning. And then the confirmation will be institutional sell pressure equating to the amount of buy pressure that we've recently seen. That could talk about a rejection here, but not until then. So smash the like button, make some noise for the YouTube algorithm, snipers, to let people know that we do have the most accurate cryptocurrency channel on the internet, and we are right, and everything is working out exactly as we've been predicting. And then I do want to talk about some of the four-dimensional revolving parts, and we'll wrap up. So the DXY, extremely important to monitor right now, because we are potentially seeing the third rejection of a start of a bull market, of a major resistance. And you can see here right now on the weekly chart, this is a macro pattern that we're following. We are currently seeing new yearly highs for the DXY as we speak, but we are facing this extremely important resistance level. Now, I sort of extended it towards the wick just recently, but I want you guys to realize this right here is that resistance that we're talking about. And so you can see right now we're already testing the previous support from 2011 as a resistance level. And so this is an area of confluence where if in the past we've rejected this level, it started a bull market for Bitcoin. So let's watch this. If we break above, then what we want to monitor is going to be the wick and the resistance and the ceiling of the wick, right, or over actually 100 for the DXY. This is the strength of the US dollar against other major currencies, which has a direct effect on traditional markets and the cryptocurrency market. And so let's monitor that. I wouldn't say we have a strong decisive break of that resistance just yet, snipers, so I'm not going to call it balls and shots just yet. But I do want to talk about quickly the S&P 500, which we are going to be monitoring here over the next few days. because of what's happening in the Ukraine and because of the slight correlation that cryptocurrency market has with the S&P 500. But recently, we've seen far less of a correlation, and we're seeing more strength for the Bitcoin price, especially with our January monthly candle not breaching the February low. So January monthly candle had a certain low, and then February we didn't breach that for Bitcoin, but we did breach it for the S&P 500. So notice right now, we cannot sit here and say the S&P 500 is still bullish if we're below the 100, 200, and 50 period moving average. Our first checkpoint right now is to get above this damn 200-day moving average for the S&P 500 at 44.55 for the S&P mini future contracts, and that would be right around, I think, 445 or 450 for the SPY pairing. And so we're watching this. Is this a lower low forming? Because if we see this play out, that's all we need for Bitcoin to see continued upside, but we need to get above these converging moving averages. On the weekly chart, how does this look? Well, it looks like we're testing the 50-week moving average right now for the S&P 500. We've already breached below the 20-week. Remember, if you're below the 20-week, that's not a bullish trend. Things slow down. So we want to monitor that. Bitcoin's certainly not above the 20-week moving average just yet, sitting just below 49,700, the major volume resistance. Currently right around that $49,000 level, I'd say the 20-week moving average. You can see here in yellow, we've yet to really see strength towards that level, but that is right there, the final confirmation we need to say Bitcoin can get above its previous all-time high at 69,000 US dollars. So we're going to be monitoring this. And with that being said, US oil is starting to cool off just a slight bit, but we are in new yearly highs at $110 per barrel. A lot of that has to do with the strength in commodities that we've recently seen. And we can see here, other than that, there's not much more to talk about the revolving parts of the market. But what I will say is that we've been the most accurate cryptocurrency channel on the internet here, Snipers. So smash the like button for the YouTube algorithm if you support our 4-dimensional analysis. I certainly appreciate each and every one of you tuned in our channel. Can't wait for us to hit 100,000 snipers strong here at youtube.com/snipers. And until next time, I'm going to go enjoy my breakfast here at the Ritz-Carlton, and I'll see you guys next time. Snipers.